Hello everybody, welcome back to the channel. My name is Domenico. Today we're going to be discussing the likelihood of a 2020 second stock market crash. So usually stock market crashes don't happen twice back to back, but we're just going to be discussing the likelihood of it. We're going to get right into the video. If you do enjoy, don't forget to leave a like. It really helps out with the channel. I do put in a lot of work for these kinds of videos, so if you want to see some more in the future, just drop a like and it'll help out a lot. So let's get right into the video. All right, so first we have to discuss what actually makes the stock market move. So basically the stock market moves, it's not in a magical way, okay? So when the stock market moves, it's because people are buying and selling, and the buying pressure makes the stocks go higher and the selling pressure makes it go lower. Now when there's a lot of people buying a stock, it's actually going up because people are paying more and more for the stock, and people are paying more and willing to pay more, so that's why the stock goes up. When a stock is going down, it's because a lot of people are selling, and when people are selling, people are willing to take less money for it, and the sellers just want to get rid of their stocks, so they just want to get the best price possible and get rid of it as soon as possible. So when a stock market crashes, it's because people are trying to get rid of their stocks as soon as possible. And if everyone's doing this at the same time, it causes a stock market crash. Now, some investors, when they see stocks going down, they want to sell even more. And this causes panic selling. And panic selling causes the stock market to drop really, really quickly. And that's exactly what happened in March of this year. Basically, the market isn't just some random magical fairy tale. The market connects buyers and sellers together to be able to sell their stocks. When asking if the stock market is about to crash, you're actually asking if people would be willing to accept a lower price for their stocks than they are currently now, just because they want to get out of the position as soon as possible. Stock market crashes generally happen when people are worried about what is going to happen in the economy. If they see some worrying data, that may cause them to panic sell. And when a lot of people panic sell, that causes a market crash. As of now, the market has recovered tremendously from the lows in March. A lot of people are expecting a V-shaped recovery, meaning that the economy is going to go right back to where it was right before the crisis hit. Since people may have baked in the expectation of a V-shaped recovery into the price of the stocks, if this doesn't happen, this may cause people to rush out and sell their stocks as soon as possible. This could cause a stock market crash. Since the market has recovered so tremendously since the March 23rd lows, basically investors have been pricing in that the economy is going to have a V-shaped recovery. If this V-shaped recovery doesn't actually happen, this may cause the stock market to crash, because if something is already baked into the stock price and it doesn't happen, it will cause investors to panic. And when investors panic, they do dumb stuff. And when they do dumb stuff, this means selling for lower prices than they actually bought. And when a lot of people do this, this causes a stock market crash. The big question is a V-shaped recovery actually going to happen? Because if it is, the stock market could continue to go up. But if it doesn't, this might cause a stock market crash, and this is why it's very important to be very cautious. In these moments in time, it's either it's going to go up another 10% or it's going to go down 10%. So the golden question is whether there's going to be a V-shaped recovery. Now, let's look at some data, whether I actually think this is going to happen or if it's just a fantasy and the stock market is doomed to crash. Looking at the data, customers can expect to have the same type of customer service as they once did pre-pandemic. The retailers have a lot of protocols to follow, and this all means worsening the customer experience in the end, because basically the customer, all they want is to get in the store, buy what they want, and get out, usually. Okay, and if they don't, they just want to shop around, not be disturbed, and basically they don't want to have to stand in line for hours on end just to get into the store in the first place. And then once they get into the store, they're kind of rushed to get out, because if they're not getting out, then more people can't come in, and it's basically just a cycle. So this basically causes the customer experience to decline, and when the customer experience declines, people rather just shop online, because the whole point of shopping in a retail location is to get served and to feel at home. But if you're not feeling at home, you're probably just going to want to stay home, shop from your computer. Stores are going to have to take protocols until the vaccine comes out. And until this vaccine, people are going to have lower expectations when going to retail stores. And they're going to have to wait in line. And that's going to be a new normal until the vaccine comes out. Until then, retailers are definitely going to suffer, in my opinion. And I don't think we're going to have a V-shaped recovery in the retail landscape anytime soon. Due to these long lineups and extreme protocols, people would rather just buy things online and stay online at home and just get things delivered to their house instead of going out, risking their lives just to go to the store and have a lower customer experience than they did pre-pandemic. So in this case, retail locations might suffer extreme consequences due to shoppers buying more online. Retailers are going to have to spend an extraordinary amount of money on those single employees at the front of the store handing out sanitizer to those in line. Let's take a company like Foot Locker, for example, who has 3,300 locations worldwide. If they hire one employee per store at an average of $13 per hour salary, and the average work week for a retail location is about 70 hours, that comes out to over $3 million a week That's just over $150 million in a year. That's massive. In 2019, Foot Locker made $500 million in net income. Now, subtracting the $150 million in extra expenses they would incur, this is not even taking into account the extra people that would rather shop online than going to the physical locations. Without taking this into account, Foot Locker will be making $350 million instead of $500 million as they did last year. In this case, they would be losing 30% of their net income only because they have to hire one person in every single location just for giving hand sanitizer out to people. If you compound this with the effects of people shopping online rather than going to the retail locations, the effects can be enormous. And Foot Locker honestly can lose money until there is a proven vaccine out there or until people realize how to stop the spread of the virus. If you're doing this for every single company across America, the expenses are going to be tremendous. And there's no way that people will be spending a lot more money to make up for this extra expense as they did in 2019, especially because a lot of people don't even want to go out of their house to shop in the first place. This is why when looking at the S&P 500 being up about 4% in the past year, it's incredible to me to see that people are probably not going to realize the impacts this is going to have until July when Q2 results come out and people actually see that retailers are having a hard time and their expenses have shot up dramatically. This is one of the reasons I've been hoarding cash tremendously for all of 2020 and especially since the March 23rd lows. Ever since the stocks have been climbing up, I haven't really been able to find good deals out there. And honestly, unless it's a V-shaped recovery, the stock market is going to end up going down, in my opinion. For right now, I do believe there will be a stock market crash or a second crash in 2020. Only because people aren't going to be spending as much as they were in 2019, especially not with the fear that their lives may be in danger. Since the correlation between stock price and earnings is extremely high, if the company you're looking at has lower earnings due to their high expenses because of having to hire extra employees just to stand at the door to give hand sanitizer to customers, it's going to be inevitable to see stock prices drop in the short term due to these lower earnings coming from the higher expenses. So you might be asking yourself, what do you have to do in this situation? Do you want to sell, hold, buy more stocks, sell stocks? What do you want to do? Well, in my opinion, you don't want to buy unless you really find some good deals. There are always some good deals in the market, but you just have to find them. Right now, they're extremely hard to find. I've been looking extremely hard and I haven't been able to find anything so far. Honestly, the only stock I'm really interested in buying at this moment is Facebook. But since it already makes up such a large portion of my portfolio, I can't really put more money into it. So right now, I'm just staying with money on the sidelines. You don't really want to sell your stocks because you feel that the stock is going to go down in the short term. Because in the long term, if you do, you might miss out on some huge gains and the stock might never actually go down. So you don't want to risk huge upside potential for some short-term decisions you're going to be making. On the flip side, if you do think your stock is overvalued, you might want to trim your position if not sell it all at this point, because honestly, there are a lot of overvalued companies in this market in my opinion. Right now, the best thing to do is hold for the long term. As a long-term investor, that's your strategy. You have to hold for the long term through the rough patches and just buy when things go down. You really want to sell if you don't have a lot of money on the sidelines. Having money on the sidelines, especially at a time like this where the market is very fragile, it's very important because when things go down, you'll be able to lower your cost basis and you'll be able to get some great deals on some amazing companies to hold for the long term. So that's pretty much it for the video, guys. I hope you guys enjoyed it. It did take me quite a while to prepare this video, so if you did enjoy, just drop a like down below. It's going to let me know that you guys enjoy videos like this so I can continue making them for you guys in the future. And don't forget to subscribe as well if you want some more stock market investing videos in the future. But until next time, have a great day.